Good afternoon, everybody, and welcome to the LendIt Fintech weekly news roundup. My name is Peter Renton, chairman and co-founder of LendIt Fintech, and I'm joined by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm good, Peter. Glad to get to the news of the week.
Exactly. My favorite 30 minutes of the week right here. We're just the two of us today. So let's kick it off with a story that came out earlier this week about Coinbase. I don't know if you've bought NFTs, Todd, but I went on to OpenSea probably 6 months ago, and it took me probably a couple of hours to figure out how to get my ETH into my, how to get my ETH from my MetaMask wallet over to OpenSea, and it was really a complicated and difficult experience. And Coinbase wants to make it easier, and I think it's a great thing.
I mean, to me, it goes to the push within the industry as a whole to make this segment consumer friendly. And until they get to that point where, for example, my wife is not, like a fintech nerd like me or you, it needs to get to someone like her.
Yep.
Or, to my brother, who, same thing, isn't a fintech nerd. It needs to get to them where it's as simple as, oh, wow, this is kind of cool. Let me do this in 5 seconds. And until it gets to that point, it's hard to say it's quote unquote flush through the mainstream. I think it's not. The path is starting to be built, but I don't think it's truly gets there until something like that happens.
I know, and we've had one of our colleagues, Kevin Travers, who's been playing around with NFTs for the last month, and he's spent hours and hours trying to figure out how to mint NFTs. Not just, you can do one at a time. He's trying to figure out how to mint like 20 at a time, and it just hasn't been able to do it. But it's just not user friendly. I feel like the Coinbase thing, talking about they're going to make minting, purchasing, showcasing, and discovering NFTs easier than ever. It's all going to be on the Ethereum blockchain. No layer 2 integrations yet, which is interesting, but it means you're going to have to pay a lot in gas fees. But it's good for the industry. I think NFTs are hot. I mean, the whole thing around autograph. We talked about Tom Brady and Tiger Woods several times on this show, and they are like their deal with DraftKings is easy. It's like just putting a credit card down and you're buying an NFT. But those are very vertical. There's no like open marketplace yet that makes it this easy. So
yeah, I mean, ultimately, it's right now it's in the space of, we're figuring ourselves out as a market. How complicated is this? How much fun can people have with it? How dangerous can it be? How much does stuff really appreciate? I think it's in that kind of weird space, which is good from the sense that it needs time to play, go through ups and downs. It needs to crash. It needs to come back. It needs to kind of get itself on a path that's long term. But I mean, it's only natural for Coinbase to take this type of project on with how powerful they are in the space.
And, with the volume that's been going on OpenSea, it's like 10x over the last quarter. That it could be a good revenue stream for them. Really, I think it could, really going to be boost NFT's popularity, I would expect. Anyway, let's move on.
Yep.
I want to talk about NerdWallet. NerdWallet is sort of it started off as a credit card comparison site. Now they're sort of equivalent to Credit Karma, but with a bit more content. They dropped their S1 on Friday of last week. Really interesting reading. They're doing better than I expected as far as revenues. I mean, $245 million in revenue in 2020. They're up like 30%, I think, year to date in 2021. Valuation of $5 billion. That's not that surprising. 21 million unique visitors per month. And it's really, you go on a NerdWallet and it's all about like the content. It's all about sort of educating customers. When I went back and sort of looked at the podcast interview I did with their CEO, Tim Chen, and he was really talking about how they are an objective platform. That's sort of their core DNA is to be objective. You can't buy yourself into a node wallet review. Everything is really everything is sort of set up so that it's really the best products that are offered, and they're obviously doing really, really well.
The first thing I thought of when seeing this and looking through some of the stories was the impact the pandemic has had on people looking and examining their financial lives.
Yep.
And so they're sitting at home all the time. At the same time, they're looking and they're sick of the bathroom or the kitchen or whatever, and they've done that home improvement that has kind of been sitting around for a while. The same people have also said, what really is my debt to income ratio? How much do I have on cards? Is that a safe amount? Is it not? Do I need to take out an unsecured loan to combine my debt and get it to one payment and not pay all these different fees? And, and I think it's a natural, time for them to go public after they probably saw a pretty big year in 2020. I also think that financial wellness angle is now moving to the front line.
Yep.
I've always thought that we've had pre-COVID part of fintech, which was the tools have been created. People talked about financial inclusion, they talked about democratization, but it hasn't really truly happened yet. Now we're hitting stage 2 of fintech, which is finally pushing it to the people who need it most. And if you know anything about education in America, you don't go through financial class during school, whether it's elementary school or high school. I mean, you basically need to go find that stuff yourself or talk to your family and whoever. I think sites like this, sites like Credit Karma, have put that further to the front of the line, and people are finally getting a sense of what it means to take on debt. And this is why I think stuff like buy now, pay later is also taken off, because people realize, do I really need to get a credit card? Why can't I just do this and it paid off in 4 installments? I don't need to put it on a balance on a credit card, pay interest every month and slowly rack up debt. So I think it's a pretty fascinating time in that content, financial wellness space. And I think they fit kind of right into that.
Big fan of that space personally. I think the more financial wellness content and apps and different ways for people to understand their finances, I think the more the better. Anyway, next up we have, this is pretty stunning. I thought Celsius Network, which
really stunning,
really they've been around for a few years, but we've written about them. They have never been a really big player, but they just raised $400 million at a $3 billion valuation. And their core product is similar to BlockFi. It's just you put out, you basically host your wallet at Celsius Network, and you can earn interest on your crypto, which is a product that has a lot, let me stress, a lot of regulatory uncertainty. Right now, there's regulatory trouble that they have basically either cease and desist or some kind of action in 4 states. But they're saying this investment's all about credibility. And just one last thing before I throw to you, Todd, is last year in 2020, they raised $30 million at a $120 million valuation. That just think about that for a second. 30x in really less than 18 months.
I mean, this at first glance, it's insane.
Yeah.
Because, it's the regulatory issues right now around the space like this. To have the confidence to put that much capital in a company, I think is I guess it also epitomizes big risk, big reward in venture sometimes too. Because if the pathway exists and all of a sudden this becomes a huge success, then these VCs are going to look genius. But as we sit here today, it's a huge risk to just pour tons of money into these companies that has shown the current administration, at least, has shown that they have no interest in, finding I guess you could say, a middle ground path. They're certainly more on the side of, we're going to over-regulate this certain segment of the market just in case. So to me, it was probably the most shocking story of the week. If you step back a little bit, maybe it's not as shocking with some of the bets that venture firms make, and if they hit a home run, then they look great. They return their entire fund and then some. But this could be one of those. It's just a huge bomb. It's
Yeah,
total
that's the thing.
crapshoot.
Because what if the SEC comes out and says, "Yep, that product illegal now. You cannot have it."
Which
what
is
does
not
do?
that far fetched at where we sit today.
Really isn't. Interesting. Just before we move on, these no knocks on these firms. I just don't know them. Westcap led the round, and then Quebec investment group, it's in French, Caisse Depot et Placement du Quebec. Forgive my French attempt, but CDPQ. Never heard of them either. It doesn't mean they're not great firms, but clearly it's not one of the A-listers as far as the VCs go when it comes to
and I also, we're not even being critical of Celsius. I think I like BlockFi, I like Celsius. I mean, we think all those companies
I like the product.
are doing.
I think it's a great product. You should be able to earn interest on your crypto. I think it's great.
It's just clearly the regulators don't, to a certain extent.
Yep.
And that's becoming dicier by the second.
Yeah, it really is. Anyway, let's move on. I wanted to talk about another funding round, which makes a lot of sense, and that is Tala. We had that in our newsletter this morning as our lead story. They raised a 145 million. The thing that was most interesting to me about this, the round was led by Upstart. Now, I can't recall any investment Upstart has made. I haven't checked Crunchbase, so
maybe one or two others. I remember when they said they were launching a fund, and I think Coinbase has launched a fund too. Right. There's been a few fintechs who've now launched funds. But yeah, I mean, none of them, to my knowledge, have ever led around.
Well, so it's basically they're led by Upstart. Valuation somewhere north of 800 million. I mean, Tala, we've had Shivani Soroya, I should say, on our I had her on the podcast. She's spoken at our events multiple times. Really sharp CEO, and a lot of respect for what they do. Focusing on, basically, they've built their company focusing on really small loans, like really small loans. You're talking about $100 or less most of the time. They started in Africa. They've now expanded to the Philippines, Mexico, and India. But what's really interesting is the other company that is part of this round, and that is the Stellar Enterprise Foundation. Stellar being a crypto company. This is their non-profit group, because they basically want to get into crypto. They basically want to be a full service financial app for the underserved, and super interesting. Yeah,
I mean, they microcredit. I think, who was the first ones to do it? Grameen back in the day.
Grameen invented the space, basically.
Yeah, so I mean, it's a great product for emerging markets. Tala has been one of the better performing names in the market. I chuckle a little bit at the crypto thing. It seems like every release now, it's like the fourth bullet point is, well, they're going to introduce crypto to their product set. So, I find that to be a little funny, but overall, it's, I think it's fascinating. The Upstart piece is the most fascinating part, like you mentioned, Peter. To me, I think it's really cool to see the successful fintech companies then recycle their knowledge and capital back to other fintech companies.
Right.
And what it shows is some of that knowledge they've learned in growing Upstart is now going to Tala. And eventually will Tala get to the point where they launch something and maybe they do, invest and do a fund down the line. But it's that recycle. I think we used to see it more in the traditional, some of the founders or early employees leave and they become angels. Maybe this is the part of a newer business model where the company just launches a fund and they invest in companies instead of some of those early employees leaving and becoming angel investors.
Right. Yeah. And I think, for Tala, I mean, that like they say that this is coming, their customers want to have access to crypto. And so, I mean, quite likely there'll be
Yeah, I
good
have no
demand
doubt
there.
about that.
Yeah, good demand there. And it's interesting, Upstart, she said they really have, there's two things they really want to focus on: improving their lending algorithms and models, which obviously Upstart is probably the world leader in doing that. And then you've also offering crypto. So that's why they've got those two investors. And I think, I've always been a big fan of what Tala is doing, and I think this is setting them up quite nicely. And just as an aside, Paul Gu, who we know really well, is going to join the board of Tala. So that's interesting. And there's also going to be someone from Stellar joining the board. Anyway, let's move on. This, just while we're staying on crypto, this story just caught my eye this morning. I mean, we get this, I think we talk about this quite regularly, but this one came from a deputy governor of the Bank of England talking about the headline on CNBC was "Crypto could cause 2008 level meltdown. Bank of England official warns." And it's funny because if you read the article, it's sort of, he doesn't really say that. It's like it's a possibility, but he says right now there isn't a systemic risk with crypto, but he's talking about down the line if it goes 10x from here or
couldn't anything have a systemic risk down the line if it gets big enough?
Right.
I mean, seriously.
Right. Yes.
I guess it's the definition of clickbait. And I do like the fact that he's like, now is the time to I think it's regulators should not overreact.
Yeah, that was a really important piece, I think, that in this.
I think regulators need to be sitting with all these companies and figuring out what they're doing, even if it's like a no action kind of place where they're operating right now, so they can fully define where the borders should be. Because I think right now they've taken such a stance that whatever borders they're putting on the space, I don't think they truly know where the border should be. I think they're guessing, like, we're going to put the border here because, that's probably the safest place, when it should be like maybe back here, which is like a some risk, but not an overt risk to the larger financial system. It's like, we're just going to play it super conservative and we're just going to put it right here. And you have this much room to operate right now. They just need to keep talking to these companies.
Yep. No, that's for sure. I think, the thing he points out is that, it's the crypto market has grown from $16 billion total market in 2016 to 2.3 trillion. So that's obviously more than 1,000x, and it's not going to grow 1,000x from here. That's obviously not possible, I don't think. But
at least not in that short period of time.
Yeah, certainly. I mean, for anything in the tens of trillions, I think is a long way away, if ever. But what he points out is that that there's extreme volatility. We know that Bitcoin, it said, has dropped 10% on 30 separate occasions in one day. 10% in one day, and it could cause a panic. It could, when it becomes when trillions and trillions of dollars are locked up in a totally unregulated asset, it makes them nervous. So I think they need to bring in. You don't want to regulate Bitcoin, I don't think, but you want to regulate all of the platforms. Like, you need to regulate Coinbase and BlockFi and all the ones that you can, and even like some of the DeFi platforms that have actual organizations. I mean, I think they're the ones you need to have. Anyone who's selling Bitcoin to US or UK consumers should have to register with, like so many other assets you have to do. So I think we're going to be. This story is not. This is going to be the big story of the next 12 months. I think there's going to be more and more regulatory pressure, particularly if crypto keeps climbing like it is now. Bitcoin gets to 100,000. Yeah, suddenly the Bitcoin will be worth more than $2 trillion, and that's gonna make regulators nervous.
Mm-hmm.
Okay, moving right along here. I want to talk about Opportune. I'm a big fan of this company as well. They've the Opportune, they're a public company now. They have, they serve the underserved, typically the Hispanic market in the US, and they pulled their bank charter application. Not that unusual. Seems like, I would even argue, most fintechs end up pulling their bank charter application at least once. I think we talk about. I talk about that. I think it's next week. I have my podcast with Michelle Alt being published, and we talked about that in some depth on the show. But the thing about it is they were in the news. I don't even remember. It was about a year ago, maybe a year and a half ago, in the news about their debt collection practices, and they seem to be pretty heavy-handed. They've made some changes, but they have a lot of there's been a lot of pressure from consumer groups, some of the advocacy groups. There's 22 of them apparently wrote to the OCC saying they should be, basically should delay approval of this until the CFPB probe into those. The CFPB is doing a probe into these debt collection practices until that's been completed. So, anyway, just another kind of, I don't know, regulatory. I know it's a black eye, but certainly not a positive move in the fintech lending space. You're on mute, Todd.
Certainly, to the lending aspect to it. The charter thing. I think a lot of these companies submit just to figure out what they need to fix, and then they pull it back, and then they fix, and then they resubmit. It's kind of like, hey, define and tell me what we're screwing up. It's like, I wonder is there a different process that they can submit a preliminary application, because it feels like we're going through this with so many firms. Like, it's news that they submit an application, then it's news that they pull it back, and then it's news that they resubmit. Like, why don't we just, under the guise of this is preliminary, review it, what's wrong? Okay, now they've officially submitted their application. It just seems, I don't know, part of it seems a little silly, but it does seem like that's kind of the process as it stands today.
Yep. Not an efficient process, but we are dealing with regulators. Anyway, I want to move on to this really curious story that caught our eye about Bank Dora. This is not a bank, believe it or not. It's actually started by 4 credit unions. In the 4 credit unions, these are decent sized credit unions, all with multiple $1 billion of assets under management. So not small credit unions, and 4 of them have banded together and created a neobank. And the bank is called Bank Dora. And the first thing I thought of when I saw that was Dora the Explorer. My daughter used to love that show back a few years ago. But it's and there actually is, and that it really is part of it, because it's one of their selling points, or the unique parts. What they're going to do is it's going to be a bilingual Spanish English. Everything they're going to do is going to be bilingual offering. And the thing that I thought was so funny, because you remember Chime used to be called Chime Bank, and then the California regulators said, no, you are not a bank. You cannot use the word bank in your name. And they said, okay, we'll just use Chime. And what they're saying here, that their argument is that they're not using bank in their name as a noun. They're using it as a verb. Bank at Dora, Bank Dora. That's what they're saying, which I don't know if the regulator's going to really like the difference between a noun and a verb, but curious development nonetheless.
Yeah, that's a strange one with the language part, but I think it's the one thing we've seen with some of the traditional firms. We saw it with Fin by Chase. People suspect that might have been a test for them, but we haven't seen many banks launch a fresh digital brand and it then work easily. I guess Goldman is maybe the one exception, though.
Yep.
Marcus is, I don't know how different that really is from the Goldman name. Like,
Well, no, yeah, but Marcus
Marcus,
doesn't cannibalize their existing business.
exactly. And Marcus was like, it's basically Goldman just kind of launching a bank that didn't exist to begin with. So I think
Yep.
that's a kind of an outlier to this type of story. But others have tried it, and we haven't seen one break out as a success yet. I think the fact that this one's like a mini consortium gives it, kind of a different feel to it. Like it's not, but still, it's like the one thing I'm trying to understand is like, why not just improve your products? Like, what? Why launch with something new? It's, there's, maybe they're going after one. I know you said that with the language and a certain segment, but if they were kind of serving some of those people to begin with, then kind of what's the point of this? I don't know.
Yeah, I mean, I guess they're credit unions that are they're all based on the East Coast. They're geographically constrained in some ways, I guess, and this is a way for them to open that up. But yeah, it's interesting. It's like and it's not. I mean, it's a neo bank, but is it? I mean, I presume it's not going to be a neo credit union, right? That's
Oh
the
no.
that
I
is.
mean, it either way. I mean, it's interesting news, and you know, long term how it works, and if you think about it, which customer belongs to who? Does it belong to consortium? Does one of the credit unions own part of the customer? And does this have, I assume that they're probably using some charter by one of the credit unions or all of the credit unions, or like
Yeah.
who's originating a loan through Dora? Like,
Well,
then who owns the loan? Like, when Cross River originates it for a fintech, it's, like, what's the piece there?
yeah. Well, I don't know. And that, like in the article in the Financial Brand, it said that they had, I think it was 1,000 or 2,000, I can't remember, downloads in the first couple of weeks. So not taking the world by storm, but a curious story nonetheless. Anyway, we're running out of time. Two more things I want to get to. Firstly, this is going to be a self-promotion. We now have a fintech ticker for all the public fintech companies we talk about on this show on a regular basis. There's 21 public fintech companies according to, this is our definition, which is basically you've got to have launched after 1998. We're calling PayPal the original fintech company, so we're going to say we include them in the ticker. We also anything launched after that have to be traded on the NYSE or Nasdaq. We may do other exchanges down the road, but that's what you have to be right now. So that rules out a lot. We decided not to do any Chinese companies. It's too uncertain about their future listing in the US. There was plenty of those, but we do have several Latin American companies on there. And you go to the lendacademy.com. You'll see the ticker at the top of the page, and you can click on that and take you more in depth into the full ticker. We'll be adding to it whenever there is a new public company. When NerdWallet goes public, they will be added to it, and it will probably be a pretty long ticker here in the next year or two. So that, and then we're going to end on the note Jamie Dimon. Good old Jamie Dimon. Isn't he adorable? The CEO of JP Morgan Chase on his annual, maybe even semi-annual dissing of Bitcoin. He said Bitcoin is worthless, and he thinks that regulators are going to regulate the hell out of it. But he says that, and I think all the people go buy more Bitcoin because its price goes up. It's kind of crazy.
I don't know what he's doing. It seems like it's just like, all right, I haven't dissed Bitcoin in a while, so I'll just kind of do it. And I don't know. I don't think there's anything really. I think he likes to throw it under the bus and kind of see where it lands. I don't think there's much thought put into some of those things that he says about it. But he does say it, every 6 to 12-ish months he keeps saying it.
Yep, and it keeps being proven to be not true. Bitcoin is not worthless. It's worth around $57,000 right now as we're recording this. But that is, I feel like he is. I mean, he's going to continue to say it that way. Warren Buffett says the same thing. Now, those guys are both incredibly smart. Doesn't mean they know anything about what's really going to happen to Bitcoin. So I think people are growing, are signing up. And I think he causes that reaction to say all of the real Bitcoin enthusiasts say, "Screw you, Jamie Dimon. I'm buying more right now." And it pops up in price again. Anyway, we are out of time. Thank you, everybody, for watching. Thank you, Todd. Always great to chat. We will be back same time next week. Before we go, though, just a couple of quick plugs. We have our Latin American event happening on December 7th and 8th in person in Miami. Go to lendit.com, check that out. Even before that, we have a virtual event focused on the European market, obviously open to everybody, focused on startups. And it's going to be super interesting as well. So go to lendit.com to check those out. Anyway, have a great weekend, everybody. Thanks, Todd. See ya.
Yep. See ya.